I believe that they are going to let it go much, 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 much higher and then revalue it. Revalue it, even if they just market to market at that point. Right now, it's valued at 42.22 an ounce. James Rickards is publicly saying 24,000 an ounce. Mike Maloney, 10,000 an ounce. It's as simple as them revaluing gold, telling that the president tells the Treasury Secretary to revalue gold, who tells the Federal Reserve. They're issued gold certificates. The Treasury issues the Fed gold certificates, who then every $4,000 increase in the price of gold, the Treasury general account would get $1 trillion free and clear. So if they moved it to 24,000, hypothetically, not only would it benefit every central bank on the planet who's been buying it, but in essence, it would allow the Federal Reserve to receive those gold certificates, for which, in theory, at least it says so in all the documentation, that they hold the gold, but it's not theirs. They're entitled to the fiat value of the gold. The gold belongs to the American people.
It is no longer possible to overlook the fractures in the global financial system. Countries have been forced to look for something genuine and reliable due to decades of debt, currency devaluation, and geopolitical unrest. That something is gold, according to Andy Schectman, CEO of Miles Franklin Precious Metals. According to him, we are in the early phases of a global monetary revolution in which gold will subtly reappear at the core of international finance. According to Schectman, central banks' extraordinary gold hoarding, especially in the BRICS countries, is intentional rather than haphazard. These nations are getting ready for a future in which the US currency will no longer control reserves and commerce. He contends that whereas the East is getting ready for a reset based on material assets, Western leaders are disregarding this change and clinging to a system based on limitless debt and paper promises. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets. We'd love to hear your predictions. Drop a comment below.
What I have been talking about, and one of the few who's out there either stupid enough or maybe I'm onto something, I don't know. I felt the same way with BRICS in 2019 when I was the only one saying it, and 2020 when I was the only one saying it at Jay's conference, and everyone thought I was nuts. And then all of a sudden, here it is. I see something very clearly, and either I'm stupid to say it, or maybe I'm just courageous enough to say it. And I've been saying that that's exactly what they're going to do. But I have a kind of a roadmap on how they're going to do it. I've been saying that's exactly what they're going to do now for the better part of 6 months in almost every interview that I've given, and I couldn't agree with that assessment more. Let's kind of break it down a little bit. Okay, it is a debasement trade. Let's start with Vice President Vance. Vice President Vance came out and cited Triffin's dilemma on White House letterhead, I don't know how many months ago, and where he said, look, Triffin's dilemma, by the way, for any of your listeners who aren't polished up on it, it's fairly simple to understand. It says that if you are the world reserve currency, it's an economic theory that I don't know how far back it goes, but if you are the world reserve currency, you will always run a trade imbalance. And the easiest way to explain it would be that the world, who needs dollars to buy everything from oil to just about any other commodity and to use as collateral for trades and whatnot and loans, they need dollars. And we cannot provide the world enough dollars just simply through trading with them alone. So they continually need to sell their currency in the open market, which pushes it down to buy our currency, which in theory would raise it up. And so over time, what happens is their currencies depreciate against ours, making manufacturing in those countries so much more affordable, makes the goods that we buy, a massive subsidy to the consumer, way cheaper. The world reserve currency has given us very, very low price goods at Walmart and Target and whatnot, but it's hollowed out our manufacturing. And so he says, look, Vice President Vance does on White House letterhead, look, this is no longer a good deal for the United States. It is a boon for the consumer. It is a massive drag and hindrance on the producer. And in essence, we've lost all of our manufacturing. Okay. So that's the beginning of it. You look at Stephen Mirren, the architect of the Mar-a-Lago Accord, who is now at the Federal Reserve, who was Trump's advisor. His whole thesis is to devalue the dollar, in essence, to reshore manufacturing. Well, how do you reshore manufacturing? My theory, and I've been saying this publicly, debasement or what, is that they are going to default on the World Reserve Standard. They're not going to default on the system, but they do not want to be the world reserve currency anymore. Even President Trump said, yeah, a strong dollar is great, but it's bad for manufacturing. No one wants to buy our stuff or come and do tourism here if the dollar is really strong. And so they're giving you little crumbs, little hints. So we look at all of the gold that's come into this country since November, billions and billions and billions and billions and billions and billions and billions every single week and month into COMEX. And no one can tell you who the hell's buying it. Who's got that kind of bread? A lot of it is stuck in the COMEX. They're leaving it in the COMEX system. because at this point, that money's still trusted, and a lot of it's leaving the COMEX. Where's it going? Who's buying it? Is it the Western banks covering their short positions? Maybe. Is that gold then going to the Treasury Department under the guise of the Exchange Stabilization Fund that the Secretary of the Treasury runs, who just happens to be a self-proclaimed gold bug, who said he wants to preside over a new monetary system, a new Bretton Woods, who said that he wants to remonetize the asset side of the U.S. government balance sheet. Well, what the hell does the U.S. government balance sheet consist of? The largest asset is student debt. The second largest asset is military. They ain't getting remonetized. You could remonetize asset number 3, I guess, which is national parks and land, but why not revalue gold, which is at 42.22 on the balance sheet. Of course, it hasn't been audited since 53, but this is a gold bug who understands gold, who speaks of a new monetary system. And I would argue with the passage of the Genius Act, there is a new monetary system. So I'm still with you here. So how does this all happen? All right, so we import all of this gold. 6 months ago, I gave an interview with Judy Shelton. And Judy just gave an interview with Michelle McCory, who also runs my YouTube channel. And she said the same thing on my show and on Michelle's. And in essence, she just did an interview with Adam Taggart, said the same thing. Now she was the primary or Trump's nominee to run the Fed in 2016. And although it wasn't confirmed, she said to me in no uncertain terms on my YouTube channel, Andy, July 4th, 2026 is a very, very big day for President Trump. It is the 250th anniversary of the United States, and he is going to reconnect gold to the Treasury market, to the back end of the bond market, the long end. And in her book, As Good as Gold, she says 50-year Treasuries will be the long one with a tiny, tiny bit of interest, 0.5%, 1%, something like that, redeemable in gold. She goes on to say 5, 10, 20, 30, and 50-year Treasuries in her book. All right, so you have a Secretary of Treasury who wants to preside over a new system. You have Stephen Mirren, who's at the Fed now as the advisor. The Mar-a-Lago Accord, devalue the dollar, bring back manufacturing. You have Trump talking about bringing back manufacturing, starting with tariffs. We've got to bring back manufacturing. And you know what, Daryl? If we don't, our kids are dead, and their kids are even more dead. We don't make anything anymore. AI is going to kneecap jobs. 60% of America has no college education. No one's got savings. We need to bring back manufacturing, period. Okay, how do you do it? The strong dollar, and Triffin's dilemma says you can't do it. No one will buy our stuff. The dollar's too strong. The cost of employment, everything, labor. We don't have any manufacturing anymore. We've sent it all offshore. How are you going to reshore everything? All right, I got you. So if Judy is right, first and foremost, and they do peg gold to the back end of the Treasury market, first, you have to let it go much higher. Now, what has gold been doing? Stair-stepping, 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 outpacing everything, and no one notices it. And people look at Bitcoin and they look at NVIDIA. They don't notice gold, that it's outpaced everything. They don't notice that it was up 40% last year, over 50% this year. That's not sexy enough unless it's triple-digit gains or something like that, but they don't notice it. Now, I believe that they are going to let it go much, 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 much higher and then revalue it. Revalue it, even if they just market to market at that point. Right now, it's valued at $42.22 an ounce. James Rickards is publicly saying $24,000 an ounce. Mike Maloney, $10,000 an ounce. It's as simple as them revaluing gold, telling the president tells the Treasury Secretary to revalue gold, who tells the Federal Reserve. They're issued gold certificates. The Treasury issues the Fed gold certificates, who then every $4,000 increase in the price of gold, the Treasury general account will get $1 trillion free and clear. So if they moved it to 24,000, hypothetically, not only would it benefit every central bank on the planet who's been buying it, but in essence, it would allow the Federal Reserve to receive those gold certificates, for which, in theory, at least it says so in all the documentation, that they hold the gold, but it's not theirs. They're entitled to the fiat value of the gold. The gold belongs to the American people. They push a button, create $6 trillion, and give it to the Treasury, which devalues the dollar massively. Devalues the dollar massively. The higher the price of gold goes, it's not even the gold price. It's the devaluation of the dollar. That's what they want. The debasement. They're debasing the value of the dollar by letting gold and Bitcoin go higher and higher and higher and higher.
One of the most significant financial changes of our time may be the quiet return of gold to the core of the world monetary system. What began with the BRICS countries gradually amassing tangible gold has evolved into a global capital rearrangement. The most influential financial players are now shifting their focus from fiat and paper assets to gold. The first obvious warning flag was when central banks started taking gold out of Western vaults. Major Wall Street firms, including Goldman Sachs, Morgan Stanley, Bank of America, and Jefferies, are now publicly predicting higher gold prices and expanding their exposure to the metal. The biggest money managers in the world are strategically repositioning, not engaging in retail speculating. Some portfolios now allocate 25% to gold and other real assets as part of a restructuring of traditional 60-40 investing patterns. Growing understanding that the current financial system, which is based on unending debt and fiat expansion, is approaching its limits is reflected in that change. Show some love by hitting the like button, subscribing to the channel, and turning on notifications. Your support means a lot.
Well, Daryl, I've been talking about gold being reintegrated into the monetary system now for a while, and this whole gold linear progression of events I saw things starting to change in 2019 with the formation of BRICS. And I've talked on your show and with Jay forever about BRICS, so we're going to put that on the side burner for a moment right now, because what is very unusual, at least very different than what I've seen in all of the years that I've been trying to analyze this situation, most of it focused on the global south and the accumulation of metal by the BRICS nations, not just metal, all commodities, and the expansion of the Belt Road Initiative and all of the partners that are involved in that system are all very resource rich, many underdeveloped, but resource rich. And you could sense that we are moving into a world where resources matter. It's kind of like that video game on your phone where you start with like a hammer and way back when you start with like a hammer and a match, and then you build your empire through the acquisition of commodities. Well, that's changing, but that hadn't hit the United States until what I believe was November, when Trump won the election. And things have begun to massively change in regards to the way the most sophisticated traders on Wall Street look at precious metals. It's one thing for the central banks to buy it, which to me is as bullish as it gets, right? When you see the central banks loading up on gold, and even more so, Daryl, taking possession, pulling the metal off of the LBMA, pulling the metal off the COMEX, taking it back from the New York Fed, removing counterparty risk. And gold and silver are two of the only assets in the world that are assets that are simultaneously no one else's liability. That's big. But when you see the most sophisticated, well-informed, and wealthy traders on the planet, that being the big commercial banks in the U.S., stand for delivery and take possession and change their tune, something is different, very different. Let me give you an example. I'll give you 4 or 5 examples. We'll start with Goldman Sachs. Goldman Sachs came out and said, in fact, they just revised, I just wrote this down here today, they just revised their numbers, which isn't part of what I wanted to tell you, but they just revised, Goldman Sachs did, their numbers. Give me 1 second here, I will find it. On Monday, Bank of America raised its forecast for silver to 65 by the end of next year, and gold to 5,000 by this year. But we're going to talk about Bank of America too. Goldman Sachs, they came out and said if the market even senses for a moment that the Federal Reserve has lost its independence, you'll see gold at 5,000 like that. Well, you look at Stephen Mirren. Stephen Mirren is the architect of the Mar-a-Lago Accord. Stephen Mirren was Trump's advisor, still is, and he filled the vacated spot at the Fed. What independence? There is no independence. You look at Bo Hines, I think is his last name. He was Trump's crypto czar. He is now running USA Tether. The whole system is lacking independence. So Goldman Sachs is more or less telling you $5,000 announced gold. I mentioned Bank of America. You look at their high buck analyst, the guy that sends out letter, and these people I'm mentioning, they're talking not to the plebes, they're talking to the institutional traders, because Michael Hartnett's letter, I don't know how many tens of thousands of dollars it is a year, but he's a smart dude, a very smart dude, and he just came out and he said, well, let's go back 1 second, because before that you had Morgan Stanley, and their chief investment advisor, CIO, says, no more 60-40, 60 stock, 40 bond. Let's go 60-20-20. Sell 20% of your bonds and buy gold. So they're saying 60% stock, 20% gold, 20% bonds. Never happened before, right? Most financial advisors would say, fine, 5%. They acquiesce. Now they're saying 20% and cut half your bond holdings. Back to Michael Hartnett, the big buck analyst who speaks to the high institutional level traders and clients. No, not 60, 20, 20. He says 25, 25, 25, 25. 25 stock, 25 bond, 25 short-term treasury paper, 25% gold. Really? Interesting. Never heard that before.
Gold has been subtly reintegrating into the international monetary system for a while now, according to Andy Schectman. He claimed that the formation of the BRICS alliance, a coalition of resource-rich countries including Brazil, Russia, India, China, and South Africa around 2019, marked the beginning of the tipping point. As they established trade networks like the Belt and Road Initiative, these nations began amassing gold and other commodities, indicating a change toward a world where actual resources rather than debt or paper assets define power and value. He pointed out that this tendency, which was formerly exclusive to the global south, has now extended to the US, particularly in light of recent political changes. The most notable development, according to Schectman, is that Wall Street's most astute traders are now shifting their positions on precious metals. In order to eliminate counterparty risk, central banks have already begun purchasing enormous quantities of gold and even removing their holdings from Western vaults like the LBMA and COMEX. However, big American financial institutions who previously disregarded gold are now starting to do the same. Schectman provided a number of instances. Goldman Sachs cautioned that gold may spike to $5,000 an ounce overnight if the market believes the Federal Reserve has lost its independence. Bank of America increased their prediction to $65 for silver and $5,000 for gold. Investors were encouraged by Morgan Stanley to switch from the conventional 60-40 stock bond portfolio to a 60-20-20 mix with 20% gold. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you never miss an update.